Hello, my name is Gwen Mazza, and you are watching The Art of Transitions. Today, we're going to be talking about accounting for your business with our special guest, Jerry Harrison. Stay tuned, we'll be right back. Welcome back to The Art of Transitions. My name is Gwen Mazza, and our guest today is Jerry Harrison. Welcome, Jerry.
Thank you, Gwen.
Jerry is from one of our neighboring areas, the Binghamton area, and she has come to join us in the Rochester area to talk today about accounting for your business. And it seemed like a kind of a neat, snappy title, since what your business and forte is tax preparation and accounting and bookkeeping and financial planning, all sorts of things. Jerry is actually the president and CEO of the Ever Evolving Enterprises down in the Binghamton area. Jerry, would you tell us a little bit about your business before we get into our topic today?
Ever Evolving Enterprises started out as a tax preparation firm, myself and one part-time person, and we have added services and added people throughout the years. We're now into our 7th year. As you indicated, we do tax preparation, financial planning. We often say if it's related to finances, we're probably involved in it. So
there you go. And one of the reasons I really was excited about having you on the show is not only all the tax preparation and the accounting pieces, I was really excited about the coaching that you do for small businesses. And in the Rochester area and around all of the states, we're now seeing a lot of entrepreneurs develop their own companies and organizations and businesses. And I thought the concept of what we chatted about briefly would be great for them. And so our audience can really begin to learn about small, medium, and large size business. There's some certain components that are important to all. If you wouldn't mind starting a brief thought around accounting for your business, what are some of the basic business budgeting needs of an organization?
well, I think when you say budgeting, that's one of the first keys, because it's very easy to get caught up in an advertising budget and all of a sudden realize I spent $20,000, $30,000 and I'm going to run out of money before the end of the year. It's very easy to get caught up in seminars and educations and trying to do that piece. So by actually sitting down and doing that planning beforehand, we like to call it developing a spending plan as opposed to budgeting, because people often think of that as a negative word. But developing that spending plan really then allows you to figure out and track, am I staying on target as I go through the year and as I go through multiple years.
Some of the small groups and the companies that have come into you, what is the challenge about helping them even set up a spending plan as they get ready to roll out their organization or their company?
It really often starts with the basics. We often have individuals who don't understand the difference between assets and expenses, the difference between liabilities, and learning the terminology. Just like with most businesses, it does have terms, and when you're using those and when you're looking at them as you're maintaining your set of books, where you put things is very dependent upon what it is that you're truly talking about. If you've got somebody who doesn't understand how to read financial statements and assumes that they're not making any money, and then we turn around and we actually correct those financials and they discover, oh, I've got a $30,000 profit and I've paid no taxes in, they end up in trouble.
I know a lot of companies use different programs. What are some of the programs you see your groups using, and what kinds of things, and why would you, because everything's computerized today.
Statistically, QuickBooks Pro is probably the biggest program out there that most people are using. There's Peachtree Accounting, which is another one. There's a couple of other smaller ones. Some people are simply using Excel spreadsheets. And if you can create them and understand them and be able to interpret them, it really doesn't matter what you're using, but you've got to understand how to use it. Like the personal software that a lot of people use, just putting numbers in there and then not looking at the reports and looking at the spit out of the data, it's not doing you any good, because now you have no idea where you stand or what's going on without doing that.
So when you're creating or you're dreaming about creating that small business, to simply sit and understand a spending plan or what have you is going to be vitally important. What are some of the breakdowns that are in that spending plan? And I know that you brought your wonderful containers, so thank
Yes,
you.
we use this, we call it our JAR system, which I often use to teach both personal finances and business finances. We generally start in the lower corner there with mandatory expenses, which are the expenses you would expect would be typical for just about any business. Their advertising budget, their office supplies, those types of things, their rent, their building cost, things that just about every business is going to
Insurance,
have.
those
Right.
kind of things.
Right. They should run you about 55% of what you anticipate your income is going to be. So if you're thinking about the fact that my income is $100,000, then I know those types of expenses should not be more than $55,000 per year. And we often find as people are creating businesses that we start out with the expenses and what they're thinking, oh, I'm going to go rent this space and figure out, well, you know what, it's $2,000. And now we add on all the other expenses. They're like, oh, I can't generate that kind of income. So it can back them into truly making sure that they're not getting overwhelmed in that initial startup phase.
Do you often see folks, especially in the initial startup phase, spending a lot of money for equipment and all those kind of pieces? And does it matter year 1 to year 3?
It can. In that initial startup phase, there can be that outlay that's more, but you're truly, when we're talking about the mandatory expenses, those are the year after year expenses. The startup expenses really are kind of kept separate. So those deposits for your electric, deposits for your phone, that initial office equipment or manufacturing equipment you got to buy aren't going to fall in that 55% number.
So it isn't actually included. That's really just seen as a startup cost, according to that, accountability for the balance on there. Business growth.
Business growth is kind of that taking 10% of your income and setting it aside in order to enable the business to grow, whether that's I anticipate I want to move into a larger building at some point in time. I anticipate I want to develop a new product line. It can be that research and development. It's to prevent you from getting stagnant, because if you just offer the same thing year in and year out and think that in 35 years you can retire doing the same thing that you started doing 35 years ago, you're not going to last in business, and you're probably not going to have a business that you can turn around and sell. So it gives that money to set aside to do, whether that's research and development, whether that's a major catalog for a new product that you're launching, whatever that is for your particular industry.
Excellent. Education. Why is that so important in companies, especially small groups, small companies? And
Going back to that same concept of you've got to be growing, or as we like to call it, ever evolving. It fits
Yes,
so well with our
that's
name.
right.
If your employees are just maintaining the same level, at some point in time you're going to outpace them if you as the CEO have higher and bigger visions. So whether it's them learning a new skill so that they become more valuable to you, or it's you learning a new skill, and that can be anything from coaching cost with somebody like Inspirit to attending a conference or a seminar to learn about a new software program, whatever that is, you need to be out there. We all know technology is flipping over and outpacing all of us, and so sometimes just trying to keep up with the technology, that's your education piece.
That's incredibly important, and I know that things continue to change and shift so quickly that in my organization, as a small business, and yet there's always expenses that go with training and educating and having people come in to help us run different pieces of our organization. So that's pretty incredible. Tell us a little bit about, let's go with community involvement.
We believe as an organization and talk with most of our small business owners about needing to be involved with the community and helping out. Small business owners often talk about, oh, I need to go to these networking groups, I got to generate sales, I got to do this, I got to do this, I got to do this. And we find the community and involvement piece allows us to be seen more as just helping out and assisting, and yet we are generating business with it. And that's almost that secondary piece. The community involvement is more if we make our community grow because we can help with the talents that we have, it's only going to help and foster all of us around. So we tend to recommend clients pick a particular charity that their whole organization can be involved in. And depending upon what you do, it can be anywhere from going in and helping to educate them to, if you're a construction firm and you want to, you know, paint their organization, if you're a landscaping firm and you're willing to do their lawn mowing and landscaping for free, whatever that is it allows us to feel better about ourselves, to feel better about our involvement, and we certainly get back 200% of what we turn around and give out.
I know you just had a recent event for your organization, and one of the things that I think is so neat is that you actually play games every year, and participants at the event pay a quarter or something very simple, and you raise money for one of the area women's
Children and Women's. It's Mom's House, which is actually a national organization that helps parents who are trying to get their education by providing daycare and other services for their children. And yes, we do. We hold a client appreciation event, have a lot of fun, and we play quarters for financial tips at the last one, where if I told you something that you learned, you were asked to drop a quarter in, and we raised a couple of $100 over the course of the day for that.
And it was a lot of fun.
It was.
It was a lot of fun. We're looking at surprise bonuses. Now, this is how much a community. Let me go back percentage-wise for one moment. Mandatory expenses is 55.
Right.
Business growth
It's 10%.
is 10% of the spending budget, spending plan. Education is also 10% of the overall spending plan.
Yeah.
Community involvement is 5% of the overall spending plan. The extras, the surprise bonus. Tell us a little bit about that one.
We often call this the play.
Okay.
You know, if you find yourself in a situation where you're going to work and people are dreading going to work, they don't stick around. And so we use this as those incentives, whether that's an employee bonus, a gift card for something that they did well, whether or not that's sending them to, you know, a spa for a day, whether that's doing a not necessarily a formal education piece, but a kind of fun type of education piece. Whatever it is to reward yourself and to reward your employees, so that you're not just thinking as this is a job. It's more, it's a fun atmosphere that everybody wants to work in. So that 10% of that kind of goes, and it can be that, you know, retreat away from the office for a day, and whatever it is that works in your particular organization. You know, we do everything from one of the latest things I instituted was $25 gift cards if somebody finds a typo on our website, you know, which helps the organization, but also provides some incentive for the employees. And
fun.
And fun.
And fun, especially that group down there. They're quite a bunch of characters and a lot of fun.
Yes.
That is for sure.
Yes.
That is for sure.
We do have a lot of fun, and we get a lot of work done.
Actually, and that's really interesting how powerful that really works. And in our second segment, because we're actually doing two segments, so the audience knows, this is our first segment just on some basics. We're going to talk more about the culture and growing and the costs internally around the business. But that's really a big piece on how you can do so much. And a lot of times it used to be very kind of lean, like do more with less, and it was almost painful. But we are actually doing more with fewer individuals and having a ball. So we're going to catch up on some of that. And that surprise bonus, the extras, is part of what feeds some of that laughter and mayhem and fun in there.
Yes, having my staff walk in their pajamas on the day of our ribbon cutting was, you know, those are the things that...
But you didn't know that was happening?
I did not know that one was happening,
That's a good one. That's a good one. So they surprised you with their surprise bonus for you.
Yes, it does go both ways in our particular organization, yes.
That's great. The final one, the top of the pier, is financial freedom. That's quite a powerful bucket, and there's lots of money in there, and that's 10%?
That is 10%.
There you go. 10%.
The old adage that I can work in my business forever and ever and ever and then sell it one day and that's how I'm going to be able to retire generally is not working for most people. Some people never want to retire, never do retire. Some people are forced into retirement because of health issues. Some people's businesses are going obsolete. You know, there's no longer a need for that particular type of product or whatnot. So when we talk about financial freedom, it really is putting that money aside so that at some point in time, you can, if you so choose, and that's really the purpose of the financial freedom jar, is that someday I get to choose whether I want to continue working or not working, because I will have enough income, I will have enough put away that I don't have to if I don't want to.
So let's say as a sole proprietor running a small business, let's use maybe one or two people in the company, or maybe five in the company. And I'm trying to think of a number. Gross revenue, 250,000. Okay, just the one or two people. That would be 25,000 put away. Is that in their retirement, or where does that go?
Typically, that's where you would see it, is in the retirement plan. It may be a case of not necessarily with a sole proprietorship, but maybe more with a corporation. It may be willing to give them part ownership. It may be working on that transition piece so that, that's a little bit of that money to be set aside to pay you for an employee, a key employee, to buy the business at a later point in time. The majority of the time we are talking about one of the many different small business plans that are out there and available. It may be setting aside money for medical expenses to cover that period between when you retire and something like Medicare picks up. So it's that plan for the future to make sure that if this business doesn't exist for me in whatever form that is, I am financially able to take care of myself and take care of my family. It may be something like life insurance in case I do pass away quicker, sooner than I anticipated. Counting on selling your business to fund your later life, whether that's retirement and being on the golf course, or if that is retirement and moving on to volunteer work or a different occupation, you can't count on that anymore. You truly need to make sure that you're setting aside, both in your business and personally, for the inevitability of retirement in whatever form.
Is that a more recent trend, or is that really what it's been like through the years, and it just is not out loud, like people just don't hear that?
There has always been the recommendation to do that, and certainly there are enough small business retirement plans in effect for everybody to be able to do that. Most small business owners, they're thinking about the immediate. It's very tough to get caught, or very easy to get caught up in the day-to-day type stuff and not think about 5 years out, 10 years out, 15 years out. And, just like as an individual, if you start with a little bit in the first year and then you gain momentum as your income grows, it's much easier than waiting 20 years in and then all of a sudden saying, oh, I think I want to retire in 5 years and I've saved nothing for that.
We talked a little bit this week, just part of what we were talking about. I'm just looking for your thoughts and opinions, both sides of the fence here. Part of the financial freedom is some business owners are going to choose, and I mean, you really have to look at what's in your best interest as a business owner. They're going to choose to buy a building, like we talked about earlier in the week, of buying a building and commanding rent from that later as a way to generate income in those kinds of things. Other folks are going to simply rent office space or a building or storefront or what have you. Different from tax perspective, from building a small business or building a business. What are your different thoughts on that? I know there's probably no one answer for any of that, but just kind of different.
Well, I think the key, especially when you're starting out, is what's the available capital there. If you're going to make the decision to spend your money buying a building versus advertising your business, because you can't do both, that's probably going to be an issue. I get very concerned with small business owners who are putting hundreds of thousands of dollars into startup costs, especially if you're dealing with a service type industry that could be started on a shoestring. You just don't know. As much as we would hope that you would be successful, unfortunately, more than 50% of small businesses fail within the first 5 years. So if you can get out of it with as little debt as possible, initially up front, my recommendation certainly is probably to rent at least for a year or two. And then, yes, if you can afford to, if it seems reasonable, go ahead and purchase that building. Realizing that tax-wise, there's not a whole lot of difference between the two. When you're doing a building purchase, you're getting the depreciation. When you're doing the rent, you're getting the value of the rent paid off. not a whole lot of difference between one versus the other, you know, depending upon what the dollar amounts actually are. So I really wouldn't make the decision renting versus owning as a tax decision. It really probably is more of a cash flow decision, at least up front.
You were just mentioning that half of the businesses that start, over half, within the first 5 years don't succeed. They don't make it past 5 years. What are some of the downfalls you see for, you know, smaller companies and organizations? What is it typically, even using this format, what is it that you see happens for them?
There are probably two key things that I see that cause most businesses to fail. Number one being not paying attention to the taxes. Especially if you're dealing with employees and if you're dealing with products. Because when you start thinking about, I've got to pay income taxes, if I'm a sole proprietor, I got to pay self-employment taxes, which can be as much as a third of your net income. And I got sales taxes and I got payroll taxes. And if you don't plan for those and then all of a sudden get behind, I've seen more businesses go out of business when I hand them a $15,000 or $18,000 tax bill on April 15th and they say, I don't have the money to pay it. So you really need to work in close conjunction with your accountant to make sure throughout the year, I know what my tax bill is going to be and I'm paying in as I go. The second issue that I see is people trying to do too much on their own. You really need to have people who are helping you and supporting you, whether that is employees, whether that's internships, whether that's a temporary employee. You will get to the point you need to think about the fact if I'm sitting in front of a client, and when I sit in front of a client, I can generate $100 or $300 an hour, whatever that number is, but yet I'm sitting here doing paperwork that I can pay somebody $10 or $12 an hour to do, or I'm sitting here stuffing envelopes, or I'm sitting here emptying the garbage, whatever that is. And it's not to say that that's beneath you to not do that. Is it an effective use of your time? And people get very scared away from hiring their first employee. But there are so many ways around that where it's not just hiring a direct employee if you're not in a position to be able to do that. And there are a lot of the local community colleges have interns that would love to come in and work for you. Some are paid, some are unpaid. We have clients who use the Kelly services on an ongoing basis. They've got the same person who's coming in there for 2 years or 3 years or whatever that, local temporary agency is, those types of things. So you're not taking on that burden, but yet you've got the help you need. And you know what? When it was nothing for my 7, 8, 10-year-old kid, 12-year-old kid to be stuffing envelopes for me or to be plugging data into the computer. And so if you've got a spouse, if you've got kids, let them be involved in the business. It's free labor, if nothing else. At least initially.
Initially,
when they get a little older, then they want to start being paid.
And we also both know what my daughter has said about being in the business, and that was, Mom, everyone knows that you shouldn't work for your parents or your family. At least that's in our case. Yes. However, she actually has worked for us for a number of years, on and off, and has done an astounding job. This past summer particularly was amazing. And it's really cool to watch the kids grow into themselves through the businesses as well. Mm-hmm. This is a very nice, simple formula to be able to help companies and corporate, small groups move forward, and also to help them keep in mind if they did want to do some small coaching groups. I know that different organizations have, like different opportunities to go in and just get some basic classes and to do those kinds of things. How much do you recommend somebody actually sit down and do some of that before they open up the doors?
Oh, without a doubt. I would love for a client or a potential client to take 6 to 9 months before they actually open a business to, people laugh at, oh, I don't need a business plan because I'm not getting any financing. But really, in the creation of that business plan, you have to think about, how am I going to market this business? Who are my competitors? Where's my price value? And so organizations like SCORE, like the SBDC, we have an entrepreneurial assistance program down in our area. Don't know if there's one up here. Those types of things, you cannot soak up enough information before. I consider it a success if somebody decides I'm not opening a business because I realize it cannot be a profitable business. That is as much a success as the guy who opens one and makes $500,000 his first year. Because you don't want to walk away with $100 or $200 or $500,000 worth of debt. And too often we see people who don't do that planning beforehand. That's precisely where they end up.
So really big pieces that you were saying is if you're going to open a business, the two most challenging areas that you see repetitively are the inability to follow up on paying their taxes. And that first one was?
The inability to ask people to help you.
To ask them to help you. Absolutely beautiful. Other thoughts about this component of what would you also give as a tip or two about making sure they stay on track with their plan? How often should they look at their spending plan?
Really want to do an in-depth analysis of it probably at least once a quarter.
Okay.
You should be looking at least once a month at it on a regular basis. Yeah. When, I often tell people when you balance your bank statement in your file, go and look at the reports. What do my accounts receivable look like? If I've got clients who are out, who've billed out 60, 90, 120 days, I really need to think about what my billing structure is. If I've got payments that I'm behind on making for that period of time. If I'm looking at those financials and saying, okay, my net income is here, I love the people who set up a separate savings account and put that tax money away so that when it comes around, whether it's payroll taxes, sales taxes, or income taxes, the money is there. Too often people think if there's money in their checking account, it's available in there to spend.
Right.
And it's not.
Beautiful. What I'd like to do is I'd like to invite folks to contact Jerry by coming through the website or contacting my office, and I'll put her directly in touch with you. She is moving right forward with her magnificent team in the ever-evolving enterprises, and she would be more than happy to address any more small business kind of questions that you have as a result, as it particularly pays attention to being accountable, the accounting piece, and the bookkeeping piece of your business. It is equally as important. It's really important for me to have a great accountant behind me and bookkeeper to know that they can come in and take care of that. We have had an opportunity to go through some exceptional points about being accountable for your business as it relates to a spending plan. And I want to thank you, Jerry, for this part of the series. We, of course, are doing a two-part series around being accounting for your business. And we're concluding the first part, the first segment. We hope you find us for that second segment. Check with your local listing.